Friends, wishing you a very happy and prosperous New Year 2026. I hope this year brings you a lot of new luck and the best wishes for the year. So, just I wanted to give you a small outlook on the year what has passed by and what is the outlook for the coming year. As you would have noticed that equity markets in the last 12 to 15 months have not moved significantly due to multiple factors, one being the earnings being downgraded, especially in the broader market spaces, including mid and small caps. And if you also look at the post the US Trump administration has started implementing tariff, the world economy has gone for a toss, and there are a lot of uncertainties. Many companies could not plan their capacity, and there are a lot of uncertainties on export-oriented companies also because of the incremental tariff which has been levied, and there is a geopolitical tension which we are currently undergoing due to the Venezuelan crisis. So India, even though macroeconomic data, our fundamentals are very strong. Our GDP is doing good. We are one of the fastest growing economy in the top economies of the world. Our interest rates have come down. Our inflation has come down, which is a very strong trend. And with this backdrop, our earnings growth has not been so great due to the uncertainty which has happened. But if you look at strongly, equity market has moved significantly higher from 2020 to 2023 on a structural bull run, which has been when the world market is going through a difficult challenge post-COVID, post-Russia-Ukraine crisis, we have done really well. And in this last 1 year, some of the other emerging markets have done better than us. But having said that, India's capacity utilization is expected to go up, and all the structural changes, something like bringing in rationalization in GST and the reduction of rate cut in some of the products will definitely increase the consumption-oriented sectors. And we will also navigate through this volatile global scenario where our central government is having bilateral trade with many countries. We have with England, recently with New Zealand, and then we are also having with France and other things. So, and most importantly, when somebody is investing in an equity, they should at least come with a 3 year view. And somebody who is worried about 12 to 15 months of underperformance, definitely that is not the right way to look at it, because equity markets never go in a straight line, and this short term will be measuring against the benchmark will be highly misleading. Even some of the informed investors are also does this mistakes of creating alpha in the short term, which is very unlikely, because you need to give time, because there are other investment products for the short term, whether it is on the pure debt side, whether it is on the asset allocation side, something like multi-asset, something like balance advantage fund, something like the equity savings fund, and all these things are all ideal for the short term, but definitely not for the for somebody who is planning in equity. They had to at least come for 3 years if it is a large cap, 5 years if it is a flexi cap or a multi cap, or a 7 years if it is a broader universe, mid cap and small cap. So don't get worried about the short-term volatility. Stay the course, because we are the fastest growing economy, and our GDP has been quite good. The corporate earning cycles will definitely revive. We will find a way to do well. So don't get panic, don't get worried about it, and don't move cycles. See, you have invested in a fund, just allow it to have a good run for a 3 to 5 year period, and then look at how it is doing with the benchmark. Because after doing the analysis, only we suggest the fund. So no need to get panic in the short term. Stay invested, and we are there to help you and handhold you to help you reach your financial destination. Thank you, and look forward to connect with you for a mutual discussion. Thank you.